With the exception of maybe AMD stock, today the market's looking pretty red. You can see on the left here, we got our AI watch list. Look at SPY's down about 0.25% today. It's at an all-time high, and we've been waiting for potential pullbacks to kick in. And with the Fed rate cuts probably, but maybe, but probably not happening on Wednesday, and new tariffs in talks the last week, we do see some pullbacks in the market. Now, you can see red on the left. You got Tesla is down just a tad. APLD down about 3%. So data centers down a little bit. You got BBAI is down about 5.8%, along with ARCAD and a lot of the drone companies. Most tech is down. We do see Google doing okay. AMD's doing all right. And Micron is doing pretty good. And that's just what we see in the market. It's good to see AMD doing well. But here is what we do when the market goes down. So today we went over and traded in semiconductors, what is SOXS. Now it hasn't moved much since we entered this position, but it's at this support. And essentially every time the market goes down, this stock goes up. So in our morning live trading this morning, what we were looking at was basically being able to capitalize on the market when it corrects. So it hasn't done much, but we ended up trading SOXS a few weeks ago. It was back around here, I think it was last week. We traded SOXS from about $7 a share. It might have even been a better entry. It was right at market open. So you can see right here is market open 6 a.m. That's normally when we trade it. If we do in a market spike at market open and maybe overextension, and we're looking at market corrections kind of hitting, that's when we buy it like we did today. And we started to see it really push up. There was a pretty large surge up to about $7.85, a 12% increase. Now we're in the similar trade and we're looking for a 6 to 12% increase on SOXS. Now you might say, Will, that's bearish. Why would you be bearish? We always talk about investing in things that are intrinsically valuable that you would hold for 5 years. Would you hold the inverse of the semiconductor market for 5 years? No. And there's certain instances where exceptions can be made. When exceptions are made and we sometimes go against the market, this hasn't moved much, but we're up about $38 or $40 so far in this small position here, is if you understand the markets and you feel competent and that you can confidently execute a trade, then it can make a lot of sense to potentially trade inverses, especially if you're, for example, heavily invested in inverses or in the main market that you're trading the inverse of. So for example, we're trading the inverse of the semiconductor market. Personally, some of my biggest positions are in NVIDIA. I've been trading it since about 2021, or investing in it, for consistent gains. And whenever it dips, I buy. And the markets are at a high right now. And so I also have AMD positions on semiconductors, and I invest in data centers. So when we see a pullback in the market and we understand things have really rallied up to all-time highs, now seeing pullbacks actually makes a lot of sense. So while maybe the values of how we invest, we don't invest in companies that wouldn't create more value over the next 5 years, let's say, or 3 years. We don't always know, but we want to make sure that the financials are good, that we're investing in something that we are happy to hold if it dips. Now, we still have a plan in place. In fact, this morning, I think we were planning profit. So we use our profit calculator here, where we will see how much we're risking to how much we're going for, and we adjust accordingly. And so we do have a plan in place, which is important. But let's say, how many of you guys have maybe gone through a trade and it doesn't go well, and then you're like holding this stock that you then don't even understand or believe in. And so that's why we focus on companies that maybe they're dipping and we're finding all the probabilities in our favor. RSI was down here. Maybe the market is correcting, or the market is making sense. The financials are making sense. And we get in with indicators, and we see, in this case, we saw a break above the EMA. So we're looking for that move, which it did continue to have throughout the day so far. But ultimately, we can't control whether or not companies sell tomorrow. And so the best way to control that is to first stack all the probabilities in your favor, and then second, execute a plan confidently. And that way you manage your risk. You have it at, in this case, we're going risk of about 1% or 2%, and we're going for about 10% margin for profit. So smaller trades that we like to do that sometimes can hedge against a market correction so that we can make money if the market corrects. And if the market continues up, well, then maybe we don't make as much, but at least we manage our risk here and we can still get the long-term benefits of those intrinsically valuable companies. So in the long term or in the short term, having a plan is going to be the key. That's what we're focusing on today. We see that the markets AI are down. You got robotics seem to be correcting pretty heavily. We got space tech today, seeing more corrections hit. For the most part, Leidos and Lockheed Martin up a little bit, or Lockheed Martin's down a little bit, but you see mostly some corrections hitting the market. ASTS is down a little bit. We also talked about ASTS the other day. Part of what we were watching with ASTS was this 5G cellular broadbands. While their company looks really good and we've seen them grow, their financials are also looking pretty overvalued. You know, they're $17 billion market cap and they got negative net income. It's like really great to see that they could, you know, deploy these 5G broadband satellites, and there's a lot of potential. But some of the companies are overvalued, and we're going to see that hit the market. We're going to see some companies sell off when the market becomes overextended. And so those are times that you can either buy dips for those long-term positions or potentially trade the downside if you're feeling confident about the direction. Today, we're feeling pretty confident. Could have locked in profits around $100 earlier today. Nothing crazy, just small position of a couple $1,000s here in the inverse in SOXS. So it is risky to trade inverse as well most of the time, because in this case, the market goes up or down like 1%, then this one goes up or down 2% in the opposite direction. So it's 2% to every 1% that the market fluctuates. So it's pretty high leverage. And you just got to be careful when doing these types of trades. I usually only allocate very small percentage, usually under 10% of my portfolio. And we're looking for margins for profit of at least really 5 to 10% minimum, and managing risk really at the most between 2 to 3%. In this case, about 2% margin of risk, and looking for about 6 to 10% recovery up into that $7.50 range. Now, some trades don't always go accordingly, and then you got to plan. One that we did not have go well was Tesla around earnings. We were able to see a big recovery on Tesla and actually sell a big portion of our shares today after that earnings, but we're going to be getting back into it most likely. But you can see Tesla had those earnings where they sold down, and we rode it back up, and we were able to sell today a good portion of that position. So sometimes it takes patience, and that's why it's good to, when you trade companies, if it turns in to a longer term trade and you don't intend it to, that you have a plan for it, then you can, you know, confidently know that you do in fact like the company. For example, SOXS, I would never trade it that I'm showing you guys here without a stop loss, without something in place. The first thing we did when we entered this trade was we said, okay, what's the 2% down on our profit calculator, which you guys can grab in the second link in the description. Sorry, the first link in the description. And we set our stop loss. That way we manage our risk. Now, if you're trading on Robinhood or a 24-hour market, make sure that you set your stop with whole shares, not fractional shares, because fractional shares won't execute after hours. So if you want your order to go through while you're sleeping, you set your order in whole shares for a time frame that it stays open, so that way it will execute and sell your shares if you're sleeping or if it's at a time when you're not paying attention. So that's something to consider. So you can see we have 385.2 shares, but we're selling 385 in total. So again, if you want to grab that calculator we use every day, it's in the first link. You can use it. It's software. It will run really great on desktop, not so good on smartphones. But if you want to use it, again, you You can use it there and as much as you want, as it's code, so you can use it as much as you want for free in the first link down below. If you guys want to join us in our daily live trading sessions, we have market overviews and we also have targets for the week. There's our calendar. We're going live in about 12 hours. And we have targets for this week for all these companies that are notable. And you got SoFi, PayPal, Amazon, Apple, Meta, Vertiv, some of these earnings that are coming out today. After hours, you got Visa and Starbucks. Starbucks is a good, and Visa is a good grasp on consumer spending. We'll get to see that. Then you got data centers coming in with Vertiv tomorrow pre-market. We'll be watching after hours on Wednesday with Meta earnings, Microsoft, Robinhood, and APLD, another data center company there that we trade pretty heavily, is reporting earnings on Wednesday. It's going to be a volatile day most likely, as we got Fed reporting on Wednesday as well. Probably not going to see an interest rate cut, but if that happens and earnings come in good, that could be explosive. If we don't see an interest rate cut or even hike and earnings are okay, you could see a really big market correction. Just keep that in mind. Thursday, you got after hours, Amazon and Apple. Roblox is an interesting one, pre-market there. MasterCard as well for consumer spending. But getting a feel on Coinbase and MicroStrategy should be also extremely volatile. I wouldn't touch that probably. But you got ExxonMobil and Chevron there. So oil reporting on Friday. So those will be the ones we'll watch, and we'll be getting an outlook in StockMeet. We had some really good StockMeet testimonials. If you guys ever want to take a look, it's the second link in the description there to join. When it comes to your thoughts on the market direction and some of the positions you're in right now, comment ticker symbols that you're in. Would love to take a look in the comments. If I earned your thumbs up, smash that like button. Do consider subscribing, and I'll see you in the next video. Take care.